So top-down approach. I use both a top-down and a bottoms-up approach, and we'll get to the bottoms-up in a second. And I'm looking for individual sectors and equities that I want to be involved with. So a top-down approach goes from the index to the sector, to the subsector, and then to the equity. And I'm looking for relative strength and setups, right? That's the whole point of this, finding the best of the best. I want to look at each S&P sector to see which one is outperforming the general market. And there's 11 total sectors in the S&P. And right here on the screen, this is all the 11 sectors, and this is the weighting. And so look how, I always think it's crazy how weighted, the top 4 parts are compared to the bottom 4. And you can see who's going to bully around the sector, right? My goal is to find names that are going up at the fastest rate relative to the general market, right? And I'm going to go through each sector and I take notes on which ones are the strongest. Now, this literally takes me about a minute, okay? And I'm going to show you how I do it. But right here, again, here are your 11 sectors. Here's the corresponding ETF that's associated with each one if you're interested in that, okay? All right, so to help me do this, I use on the TradingView system, TraderLion relative strength line on TradingView, okay? So that's this down here. This is TraderLion created this, and that's my relative strength line. So basically up top here, I have XLK, right? This is a line chart of XLK. Now down here, this is XLK relative to the S&P 500 SPX, okay? So this is relative to SPX. And all I do is flip through all 11 of those and pop them in here, and I look at this line. I'm not even looking at this line at this point. I'm looking at this line, and I want to see this type of look to it, right? A lot of this blue and moving up and to the right, that shows me that this has a lot of relative strength. So during this time period, this is roughly 2017, 2018, this is showing how XLK was outperforming the broader market S&P 500, okay? And you can see as things start to turn, this is the type of relative strength that we don't want to see. This is relative weakness, okay? So right here, going through each sector, this, to use like a housing or map analogy, right? This gets you in the right zip code, but which is nice, right? So you're in the right zip code, but I want to drill down further. I want to get to the right block. I want to get to the right house. So I have to keep going. So yes, I know what sectors are outperforming the general market. So after I do that, I'm going to change the relative strength line down here. And it's no longer going to be SPX. Now I'm going to plug in whatever sector I saw that was outperforming. So right now, this is XLK down here. So everything I do up here will be relative to XLK. So when I go through this, I keep a separate list. It's basically an Excel database of subsectors, thematic ETFs for each sector. So XLK, I might have 20 or 25 different ETFs listed, and I also keep links to their websites, but we'll go over that in a second. Anyway, so I keep the thematic ETFs there, and so up here I'm plugging in the thematic ETFs, right? So they're specific to one part of technology sector. Once again, I'm looking for outperformance, right, over the broader sector, right over here. And by drilling down, I'm hoping to get the best of the best names to stack the odds in my favor and to make money. Again, this is my top-down approach. Now, you see IXN during this period of time right here, even though it was going sideways, it showed some relative weakness. Then it was showing relative strength here. And even though it kept going higher relative to the broader technology sector, it was starting to show relative weakness down here. So this tells me that there's better places to put your money than IXN within the technology sector, right? Again, this is about 2017 to 2018. And just for comparison, so this ETF went on to gain roughly 50% during this time period. S&P was up about 22% during this time period, and the NASDAQ was up 31.5%, okay? So it just shows you how relative strength lets you kind of, find the best of the best and lets you outperform the markets. And this is on the ETF level. We haven't even drilled down to specific stocks yet, which we're going to get to. All right. You know what you hold, right? The final step in the process is if you want to own individual names, not everyone does, but if you want to own individual names, is go to the ETF website and look at the top 10 holdings, right? This is the part where I start to really look for setups that give good reward to risk scenarios. Listen, even if you just want to buy the ETF, I think you should definitely go to the website anyway and know what you're buying, right? Know, is it equal weighted? Is it cap weighted, right? Who can bully this around, right? I mean, if you see here, this is IXN, and I mean, Apple and Microsoft, holy cow, right? There's a 38.5%. That's huge, right? Huge. So you have to know what you're doing as far as what you're holding, even if you're just buying on the ETF level. Now, again, during that time period, many of these names were setting up and went on to make 50 to 90% gains at the individual stock level in 2017. And these are really remarkable numbers, right? And they're numbers that can be had for all of us, right? If we know the market health and it's a bullish market and we find the best of the best names to be in. So here's the example, Nvidia. So you can see the relative strength, right? So here's 2017 and it was going sideways, right? And you didn't see any real relative strength to talk about at the beginning of 2017. But then it had earnings, gap up, huge volume, and boom, there's your relative strength on the gap right there. It had the volume, it had the pop, it was coming out of a base, it had everything that we're looking for. Now, from May to December, here, from arrow to arrow, Nvidia was up 90%. So we're talking about in 7 months, there was a 90% gain in a large cap, very liquid name that all of us could have been involved with. I mean, that's what we are looking for, the best of the best. And that's what the top-down approach is going to give you, okay? Again, it was up to us to find the base and the breakout on volume and all the other pieces. And again, it had multiple areas where we could have been involved. You know, some people, you know, we work full time. I work full time, right, outside the house, not with has anything to do with markets. So I think that if a thematic ETF has enough liquidity, then for some people it makes sense just to buy that. Again, especially true for people that work full time, maybe can't be in front of the screens every single day. You know, this enables you to participate in a trend following strategy to potentially, hopefully, outperform the market, right? That's the whole idea of this. I think weekly charts make the most sense for this type of strategy. Again, so the day-to-day fluctuations don't really play a factor into your trading. And because most of these folks that work full time will probably be doing almost all their work on the weekends. I do almost all my work on the weekends when the nights are, when the markets are closed, or potentially at night. You know, and remember, in bull markets, the trend doesn't really change overnight. It doesn't abruptly change, right? It takes time for that trend to change. And so weekly charts makes a lot of sense for staying in trades. Now, owning ETFs versus owning individual names, you mitigate some of that single stock risk, whether it's through earnings or news or whatever it may be. So that's basically how I do my top-down approach, right? It is a little bit time consuming, right? It takes a little bit of time on the weekends to do this, maybe a couple hours. But like I said, I keep a database of all my thematic ETFs. I keep a list of each sector, and subsectors and thematic ETFs. I keep on that Excel spreadsheet, I keep a link to their holdings page. So I click one link and I'm right to their holdings, so I can see up to the minute holdings. And that really does speed up the process.